Hello traders and welcome to another video review. Today is Monday, June 19th, 2023. We are starting new trading week on the market. So let's find out what's going on the Forex economic calendar today. As you can see, there isn't many important data releases at all. We got some data from Brazil, however, Brazilian Central Bank Focus Market Readout. We got other, let's say, data, from Mexico, retail sales from Mexico. From Canada, we got RPMI scheduled for release at 2:30, and then eventually at 11 p.m. we got Westpac Consumer Sentiment data from New Zealand, and that's it. This is why let's switch straight on to the charts and see how is the weekly outlook corresponding with the current market behavior. So the impact of the last week news, which was Fed interest rate decision, European Central Bank interest rate decision, and the other very important data releases might change the midterm and long-term outlook for various markets. So let's switch to the weekly charts straight on. We are starting with the euro-dollar weekly chart, and what do we see here is, of course, this bounce from the lows at the level of 9,537 made last year, 26th of the September. So we have at least 8 months of the movement to the upside. The high was made at 1.1096. This movement to the upside looks promising. However, please notice that we almost hit the extremely overbought market conditions. Then we went down. Then we hit again extremely overbought market conditions on the RSI. And then we went lower again. So we're pulling back from the extremely oversold market conditions and making some sort of the getting the fuel from the market. We're bouncing higher. So right now it still looks bullish. It still looks bullish on the weekly, and next level is 1.1096. In a case of the movement higher, we will test 1.1482 or even the technical resistance at 1.1606. So euro dollar weekly outlook bullish above the moving averages. Let's take a look at cable. Cable movement to the upside is even more interesting. Why? Because from this low of 26th of the September last year to this recent high, we have already retraced 61% of this whole movement here from basically from the whole 2022. Right? So we are roughly around the level of 61%. Of the Fibonacci at retracement. We are above 50 and 100 periods moving average, getting closer towards the extremely overbought market conditions level. So that's roughly around 1.3. So this area here just above 1.28, 1.3 is the key area for bulls. So this is go or not go for bulls. Line in the sun for bears, because if we break above 1.3, it will be very, very hard for the markets to change the very, very strong trend that formed on this market. So this bounce here essentially looked like a corrective bounce to the upside. But if we break, if we continue to go higher that strong, 3 weeks in a row were green. So if we continue to move to the upside that strong, this market might reverse the downtrend to the uptrend in the mid to the longer term, targeting even swing high at 1.40 to 48. So that's the British pound. Let's take a look at another market. Let's continue with the Forex market. US dollar to Japanese yen. Weekly time frame chart. Big trend to the upside. 151.96 trend high. Correction. from the extremely overbought market conditions on a weekly time frame chart. We're going lower, and from 127.23, just above the 100 periods moving average, we are bouncing higher. We broke above the 50. We are still above the 100 periods moving average. Outlook remains bullish. Plenty of the bullish weekly candles here. So where is the next target? Well, it looks like the next target might be roughly around 145.69, then 150, and then of course this swing high from October 17th, 2022. What is the alternate scenario? Breakout below 137.92 might light a red light for the bulls. We might see some deeper correction in that situation. Otherwise, we got some indication of the possible twisted top. However, this is weekly time frame chart. Don't worry about it. We just started the week, so we are waiting for this week to be completed, of course, and then we will see if there are any candlestick formations on this chart. So weekly outlook for the US dollar to Japanese yen, generally uptrend continuation. US dollar to the Canadian dollar weekly time frame chart is looking way lower. Way worse for the US dollar to the Canadian dollar, because the market wants to go lower. What we are sitting at the 100 periods moving average. Okay, let me just change the color of this averages, because we might be getting confused. So one will be green, one will be, there you go. 50 is green, so we are already below the 50 periods moving average, and we are sitting at the 100 periods moving average. Last 3 weeks were down. Okay, last 3 weeks were red, twisted top, bearish engulfing, Marubozu engulfing. So there is an indication of a possible kind of a pressure from the bears. We still are far away, like a 10 RSI points from the extremely oversold market conditions. So there is still a room for this market to go basically to the downside. So this is not that moment in time just yet, and we might see some sort of the bounce possibly, but then if the bearish pressure will persist, we might see lower levels on the US dollar to the Canadian dollar weekly time frame chart. And the last in that sequence of the euro dollars, of the forex pairs, is the US dollar to the Swiss franc. And as you can see on the weekly time frame chart, we just have the opportunity to bounce towards the 50 periods moving average. Then it was rejected, and now we are again moving lower towards 8,819. This is the swing low from the 1st of the May, and only a sustained breakout above the 50 periods moving average, 50 weeks moving average, might change the temporary outlook to more bullish. Otherwise, we should continue the down move lower. Now, that was the forex market. Let's take a look at gold. The gold weekly time frame chart doesn't go anywhere. Last week we had a very interesting candle. This candle was, of course, the kind of a hammerish pinback candle right into the 50 periods moving average. Then the market is trying to bounce, but so far no avail. The momentum is still positive, 55 points. It's not that strong. So please watch last week low at 1,924 for a breakout. If there is a breakout, we might continue lower towards 100 periods moving average, but the outlook is not that clear for now. On gold, we see some pressure from the upside. We see some dodgy candles, another dodgy candle, pinback candle, inside bar, confirmation to the downside. We might extend this drop for at least one more week on gold. Crude oil weekly time frame chart is showing us a very interesting point of view. Let me just switch to the weekly. Yes, there is a period of the consolidation on the crude oil, and definitely market participants, they don't want the crude oil to drop below $65 per barrel. There is one very important level here. It's located roughly around 61.91, and none of the bulls wants this market to drop below this level. 61.64 is the zone, very important zone, long-term zone for the bulls. So this is a demand zone, and every time the market hits this level is bouncing right back up. The bounces are shallow. This is not rallying market back towards the 100 and 120 levels. We are already below 50 and 100 periods moving average. As you can see here, 100 is visible now, 50 is visible here. So only a breakout above these averages might change the temporary outlook. Otherwise, consolidation will continue as long as this market provides the support. We got some sort of the bullish hammer made just last week. So if there's a confirmation in the form of the weekly green candle, we might see a jump towards the moving averages, but we need much more than this in order to rally on the crude oil. And last but not least, let's take a look at Bitcoin. Bitcoin weekly outlook, I think it's quite clear right now. Since the top from the November last 2021, we have entered a bearish market where the bears are in control, and this market is of course called a crypto winter, right? So the downtrend prevails on the Bitcoin market. We might have some sort of the impulsive wave to the upside developed recently. Nevertheless, around the level of 30, somewhere there, we got indication of the doji bear candles, we got indication of the bearish engulfing, and there is more and more red candles going on until the test of the 24,700 dollars or $25,250. So this $500 zone is still a bullish zone, but we are below 100 periods moving average, and we are still moving towards 50 periods moving average. No new high was made in 2 weeks. Okay, the last high, the last consecutive high was made some weeks ago, basically. So we are clearly under the bearish pressure. Market is approaching the level of 50 on a weekly time frame chart, which is the neutral level. So any breakout roughly up below the 50 periods moving average, 23,591, is bearish indication, is a show of a bearish power, and we should visit that $19,500 level next. So sub $20,000 are coming for the Bitcoin if there is no really strong breakout to the upside soon, because still this market is being controlled by bears here during this corrective pullback, corrective cycle to the downside. We are waiting for a possible impulsive wave to the upside to develop. However, there is no indication this kind of event is taking place right now. That's everything from me for the weekly candles, weekly market review in form of the very simple yet powerful technical analysis tools, weekly moving averages, RSI, candlesticks, patterns, and general price action. Thank you very much for watching this analysis, and I hope we will see each other tomorrow. So take care and bye bye.